Okay, cool. So at a glance, this is what you're going to be looking at, okay? We're going to be looking at the candlestick charts. This might look like a bunch of gibberish to you or a bunch of lines, but let's put it into play and then we'll break it down very quick, okay? Let me open this back up. Okay, so this is what those candlesticks look like on a chart. You'll see typically like blue and red, green and red, black and white, or like green and white. The colors don't necessarily matter. All that you need to understand is that one is up, one is down, right? So by looking at this, in this example, how I have my chart, I have them in blue and red. So the blue indicates something, the market going up, and then the market going down is red. Okay, so that we're all on the same page here. We're going to look at how things are on the different time frames. So right now I have it on what's called the day. So each candlestick, and we'll break down what they are in a sec. Each candlestick represents a day. Okay, so right now you can see that we are on today. So today we started down here and we're up here, and then so on and so forth. Okay, now before we get into too much gibberish, let's go back. We'll break that down so we're all on the same page. So I hope to God all of you can see this because I can't confirm. So if not, then just imagine that it's something nice and pretty. So the one on the left, this would be what's called a bullish candle. So you can see here, it opens at this area here. So let's say for today, it would open here. It goes up as high as the top there, where it says high with the little green dots. It goes as low as this area with the green dots right above the O. And then when the day is over, it closed right there, which is above where it opened for the day, but it's still lower than the high of the day. Okay? The green part is called the body, which is what indicates to you if it's a bullish candle or positive candle. So you have an idea. And then the little parts on the above and below would be considered a wick, just like a candlestick, not like a John Wick. So a candlestick wick, okay? So on the right-hand side, we have the same thing, but opposite. So let's say for the day, it opened here, and it went up higher. So during this time frame, during this part here, the candle would have been green because we opened, we went up high, it's green, but then it started to drop down and get all the way to a new low. And then it closed higher, but still lower than where we opened. Okay, and because the candlestick is lower than where it opened, it's going to be a bearish candle. So in other words, it's like sell or buy, sell, if you want to look at it that way. Okay, let me just come back here and make sure everybody's on the same page. So before we go zoom in and out on the actual charts, did that make sense? For those that this is unfamiliar to you, this is your first time. If not, please let me know. I can go back and repeat something. Except for those that are driving. I don't want you to be texting and driving because then you're going to have a bearish day. Okay. So yes, made sense. Okay, cool. So everybody's on the same page. Candlesticks, bullish, bearish, green, red, blue, red. The colors don't matter, okay? Here, there's no discrimination when it comes to candlesticks. Colors don't matter. We love them all the same. We can make money on the way up, make money on the way down. Okay, cool. Now let's look at them on TradingView. Now, whatever app, website, doesn't matter that you use, all of them give you the option to look at charts in different graphs. Traditionally, you'll see a lot of candlestick charts. You'll see some line charts and like all this stuff. Don't get confused with like all this fancy stuff. Keep it simple. Candlestick charts is all you need. And you can do plenty with that. So let's go back to the app. I'm using TradingView here. Let me just. One second here. Okay, perfect. So this is TradingView. It's a free app. You can go to the website, tradingview.com. You do not have to pay for the service. You don't need to. A lot of our top traders don't even bother paying for the subscription. That's if you want to. You're not obligated to. Nothing to do with iGenius. That's totally up to you. Again, you can survive with the free version. This is the free version. Okay, so we are looking at different time frames. This is Bitcoin USD. Now that you understand how the candles work, how the wicks work, how the bodies work, bullish and bearish, let's go to the day. So here's the day today, and this is how it worked for today. So we opened over here, and we went down here for the day. You can see the bottom part of the wick, and then it started to go back up. You can see the little tiny wick there, and then right now we're sitting here. Okay, so this would be, so far for today, we are bullish. And the reason why they say bullish and bearish is because bulls, they fight like thrusting their head up, and bears fight like, you know, clawing downward. So pushing up and fighting down. That's actually why I didn't make it up. And if you ever see a gorilla in the mix, like bearish, bullish, and gorilla market, there is the Wall Street's way of making fun of us as like us being dumb monkeys, and that we don't know anything about trading, and they don't want us to be trading and investing because they want to control markets. Okay, so this is yesterday, and how this one would have worked was the candle opened up here. I'm just going to keep it on the red one, and it actually went up a little bit. You can see the little wick there. Let me zoom in a little bit. So here we had a little bit of a wick. So in this time frame, this little window here, it would have been blue because it would have been bullish. It came down all the way down yesterday to right there. You can see it. And then came back up to here. This is where it closed. Okay, so yesterday we were bearish. We started up here and we ended here. Then the next day started, which makes sense. So we started right here. Okay, so that's on the day chart. Why do people talk about different time frames? Days, weeks, months, 4 hour, 1 hour, 45 minutes, 30 minutes, 15 minutes, 10 minutes, 5 minutes, 3 minutes, 1 minute. What they mean is this. So if we know that this is the day, let's zoom in on the 4 hour, which is the next time frame. So watch the bottom part, and you can see where the day goes. So we can see where the day starts, okay? So Monday, Tuesday, Monday, Tuesday. So 4, 8, 12, 16. I'm sure I'm on the right one. Oops. Where was I? 4, 8, 12, 16, 24. That's one whole day. Okay? Broken down to 4 hours. So the day broken up into 4 hours, we can see all the movements in 4 hour time frames. So we can see that we kind of hung out over here for a bit, and then we shot up for the day, okay? For yesterday, since we start here Monday, right here, Monday, 4, 8, 12, 16, 24. Then the next is Sunday. So from here, we started yesterday up here. We already know that we ended up on a bearish day, and we can see the ride for the entire day. We crashed. So yesterday was a drop. Today was a recover. What about on the 1 hour? I'm going to go 1 hour. I'm not going to show you 3 and 2 because not all platforms show you 3 and 2. So it'll be the same principle, okay? So you can see it broken down. And why people do this, it depends on the type of trading that you're doing. Some people do what's called scalp trading, which means that they're just like in and out of the market. And that's very, very high risk. High risk, high reward. I don't recommend that, especially for beginners. If you want to know what it's like to lose sleep for days, then do scalping. But otherwise, day trading and swing trading is like long form trading, is probably better for you in terms of like risk management. So 15-minute time frame would be for those that are just focusing in on the day and they want to see the movements with what's happening in the markets. Okay, so same principle, you can start to pick up patterns. But here's why all this is important. You will hear a lot of the top traders, even like Alex and like some of the other people that have the channels, they will zoom out. So we're gonna look at the 1 week. Okay, so each candle is 1 week. Okay, so you can see in the bottom there. And the reason why people zoom out, so zoom out on the time frames, I'm not just zooming out on the chart, I'm zooming out on the time frames because we're at 1 week, is because you can see where different prices really had an impact. So you can see that up here, this zone is one that the market is fighting to break through. Because you can see that up here, you can see that in this area, whenever it's touched it, it bounces back. It tried to break through, didn't make it, and therefore we're back. So it came up here like this, broke down, came back up, it just broke through, it didn't last too long, and then it came right down. Okay, so the chances are, if it starts to make its way back up, you can kind of anticipate it's gonna hit that. But if you zoom in on the charts, going down to the 4 hour, it's gonna look a little different. I don't wanna start confusing people, but you can start to get the idea. I'm gonna end up confusing people, so let me close this up. So, thumbs up if I was actually sharing my screen this whole time. Okay, good. I'm just making sure I wasn't just telling stories for nothing. Okay, so as you can see, as the markets, as you zoom out on larger time frames, you can see where the markets or the institutions or the whales or the big money actually took more buy positions or sell positions. That's where all the money's hiding, right? So for us as regular investors, regular traders, retail investors, we don't have big money. You can have, even if you have $1 million account to invest, that's actually considered like a small account in their eyes. Okay, that's not a small account to me, but to them, it's like peanuts. Okay, so even with $1 million, you can't move a market. So we have to look where they're moving it because you will never beat the casino. So please don't treat this like gambling. But since you know that you'll never be beating them, you have to play with them. And if you know that when you hit these target areas, you can zoom in on the time frames, like looking in at the day, looking in at the 4 hours, 1 hour, 30 minutes, 15 minutes, etc. You can get a better idea as to what's happening at certain levels, or if it's about to hit it, etc., etc. So that's a way of like zooming in and zooming out. But for you to understand that, you have to understand what the candlesticks are, if it's bearish, bullish, and what the different days matter. So I remember one question that I got often was, "Hey, do you look at the 1 minute time frame?" I don't. So I would always get that question wrong. I do not. To be honest, I find that too high anxiety. I'm still using it. I'm like less than 5 minutes. Okay, thank you. So that's like too high anxiety, especially if it's like 1 minute time frames, because then there's too much happening at once. So if you're going to be trading, first you want to make sure that you understand what type of risk management you're going to do, because if as an example, if you only have $100 to trade or invest, and if you lose that $100 and you're going to lose sleep, you shouldn't have been investing it. You are gambling it. So you have to have the right mindset. If you're not in a position to be losing your funds, and we're not looking to encourage people to lose their funds, but it does happen, especially if you're inexperienced, you're better off just staying with a demo account. There's zero shame staying with a demo account, even if it's for 3 months or 6 months. Losing zero money is better than losing it. Okay, so with that being said, are we all on the same page with understanding candlesticks and time frames? Thumbs up or drop a 1 in the chat. Sylvia, you okay? I get like kind of a half nod. I'm not too sure. Yes, no, yes. You seem a little upset. Don't let the candlesticks upset you, Sylvia. There's no real fire on these candles. And they're not scented. Okay, perfect. Thank you, Sylvia. So with that being said, for today, I want all of you to practice looking at charts understanding if it's bearish or bullish, if it's going up, down, and kind of get a feel for it when you zoom in and out of the charts. Start to look out, look at the month view, weekly view, day view, and get an idea. So like, you know what, I think by the end of this week, it's going to hit this price range. You don't have to look for an exact number, like, 20,000, It's everything works within a certain range. So it doesn't have to be exact, at least to start practicing. So I want all of you to get into that habit of looking, zooming out, get an idea, and then have an idea for the week. Cool. So any questions, drop it in the Champions University. If you haven't started demo trading, please do so, whether it's in Forex or binary options. Please, for the love of God, don't be just throwing money in because you think like, yeah, I figured this out. Especially for the guys, you do not have self-control. We're the worst at it, okay? You're not some genius. You're not going to figure it out. You're not some prodigy where, ta-da, in 30 days, you've mastered trading and investing. It takes months to figure out and practice, okay? If you haven't blown an account, you haven't been practicing. I'll just say that right now, okay? So with that being said, I'm Edwin Zapata, and I will see you in the Champions University chats.